So while stocks fight for some traction one day ahead of the Fed meeting, our next guest says he's not surprised by the market's recent choppiness and expects more of the same going forward. Here with me right now is Stephen Wieting. He's Managing Director of Economic and Market Analysis at Citigroup Global Markets. Steve, good to have you back with us.
Okay, thank you.
So let's talk about this. So you expect more volatility in the markets?
Well, I just think that you don't get a 70% rebound in markets because of steady growth.
Right.
What we did last year was starting the year with a contraction of 6% on GDP, ending it with a 6% expansion using rounded numbers. That gets you that kind of move.
Is it important to remember that that big bounce back, a lot of it was kind of getting us back to normal, that there was a lot of overselling?
Oh, absolutely. That's exactly right. And in an environment going forward, we're not going to have that kind of output volatility. So a swing in a directional market to that extent is not going to be seen again.
Well, what do you think about when, we've spent a fair amount of time talking about 1150 on the S&P 500. We broke that last week, having some time, hard time kind of getting back above it. Is that a key thing in your view or not necessarily?
Well, I'm not a market technician,
will say yes,
so there you are. No, what they think about specific levels and short-term trading, I don't have much a part of it. But I think that, with the very sharp rebound that we've had, we obviously have higher cyclical expectations than where we were, but the embedded growth assumptions in markets, so the underlying optimism, I don't think that it's that very deep right now.
It's not very deep.
No.
But nonetheless, you do think the economy has stabilized?
Oh, absolutely. And just following what financial markets did last year feeds through to the economy this year. It's easier, in fact, to be an economist than an investor.